Welcome to our on-demand training for understanding Social Security benefits for federal employees. On behalf of Serving to Serve, welcome. Whether you're joining us for the first time or you're a returning member of our federal employee community, we're glad you're here. My name is Dan Sipe. I'm actually the founder of Serving Those to Serve, and we are a federal benefits education and fiduciary financial planning group with the unique mission to reach, teach, and serve you, the career civilian Fed. And I want you to think about that, because I don't think you will hear that anywhere else. I want to begin by as I always do, by saying thank you. Thank you for taking the time to watch today, but also thank you for your service to the government, to the country, to me, to everyone. You don't hear it enough, even in normal times. And the last 18 months have been anything but. So you're definitely not hearing it now, but you're always going to hear it here. I know you're watching this on your schedule, and that's exactly why we created this format. We have recognized, again, over the last 18 months, that your work environment has changed, and finding time during your workday for professional development has become increasingly challenging. So we've made this valuable training available whenever and wherever works best for you, whether that's evening hours, weekend time, middle of the night, or segments of it that fit during your day. Now, for this training, once again, we have the guru, Ed Zerndorfer, with us. Ed is a retired career Fed himself and probably has more certifications than anybody we've ever encountered. He is also hands down the most published author currently writing about federal benefits. You have no doubt encountered his work in FedSoup, federalnewsradio.com, My Federal Retirement, Federal News Network, and perhaps most importantly, for us in the Fed Zone, you can find that at fed-zone.com. Quite simply, nobody knows these topics any better. We're lucky to have them. You're lucky to have them today, tonight, whenever you're watching it. Before we get started, I want to talk a little bit about the model for this training, because it's likely different from any other training you've attended in the past. So today is what we call Part 1, which is general education delivered in this on-demand format. But we also have Part 2, which is personalized education delivered via Zoom at a time that also works for your schedule. Why? Because one of the things we've learned over the decades, and it is decades, like 4 of them, that people will attend multiple webinars, seminars, lunch and learns, trainings, watch videos, watch podcasts, you name it, and still don't completely understand how those benefits will behave and personally impact them and their families. So Part 2 is created to get your specific questions answered, and to make sure that you get that deep and personalized understanding without pitches, pressure, or obligation. And that is key. Because Part 2 is personalized to you and your family's unique situation, we do offer it by appointment only. So throughout today's training, you'll see QR codes on the various slides. If at any point you want to schedule a Part 2, simply use the camera on your cell phone, scan that QR code, it'll open a scheduling page. You can pick a great date and time. One thing I will tell you is these are incredibly popular and have gotten more popular again over the last year and a half. If you don't see anything in the first week, scroll to the second. We've opened up maximum times on all of our calendars. I've even come off the bench, so you might get stuck with me. So you'll be able to spot a time there. You can pick the best one for you. Now, if you happen to be viewing this from your cell phone and can't access the camera feature at this moment, just take a screenshot of the slide. Then you should be able to open it under your Photos app, tap and hold the QR code, and that should still open the scheduling page. Now, if you're not a QR code person, that's okay. You can also email us directly at part2@swserve.com to request that session. So here's how this on-demand session is going to work. Ed will present the comprehensive training and content. Throughout the presentation, you'll see questions that we typically address in our Part 2 sessions. And while you won't be able to ask questions in real time as you would in the live webinar, you can schedule that Part 2, or if you have to, you can even email us the question. We're happy to address everything that's unique to your situation. Next, in keeping with our mission, in the interest of full disclosure, Raymond James requires us to share the following slides, and we're happy to do that. A couple of things I want to point out. Number one, Serving This Serve sponsors these educational sessions to bring Ed to you. Number two, Ed is not here to solicit, never. And all of these will be purely educational. And lastly, we're not a part of OPM. I'll be back a little bit later to talk about the whole process, but without further ado, let me tell you a little bit about Ed. He's been helping federal employees have a better understanding of their benefits and make better financial decisions for over 25 years, closing in on 26. Now, I told you he has a ton of certifications. Boy, here they come. He is a certified financial planner, a chartered life underwriter, a chartered financial consultant, a certified employee benefits specialist, an enrolled agent, and like every single one of our advisors that's serving those who serve, he is a chartered federal employee benefits consultant. It is also a member of the Maryland Society of Accountants, the National Association of Enrolled Agents, the International Society of Certified Employee Benefit Specialists, Financial Planning Association, National Association of Health Underwriters, and the Society of Financial Service Professionals. He writes, boy, howdy does do right, every single week for us in the Fed Zone, as well as for My Federal Retirement. And he is also my featured go-to guest on our Fed Life podcasts. You can find those on YouTube. Great deep dive topics that we have at least 2 a month up there for you. They're fantastic. Check them out. But for now, without any further ado, I will turn it over to Ed. Take us away, sir.
Thanks very much, Dan. Ladies and gentlemen, welcome to this presentation on understanding your Social Security benefits. Before I get started, I want to take this opportunity to thank Dan and all the people at Serving Those Who Serve for once again giving me this opportunity to do a presentation on another federal employee benefit. I couldn't do this presentation as well as the webinars that we conduct, live webinars on average about 5 to 7 per month. I couldn't do any of them without the full support of Dan and the people serving us. So I want to thank them. And again, I want to welcome everyone to this presentation on Social Security. Ladies and gentlemen, it's a very important topic, talking about Social Security. A lot of people don't think about it until they get, let's say, into their 50s or 60s. They say, I get the Social Security benefits. When can I get that benefit? How do I apply? Things like that. And as they get closer to that point where they're gonna apply for benefits, their benefits, retirement benefits, maybe disability benefits under Social Security, they start asking a lot of questions. And unfortunately, they don't have many people who can answer their questions, including people at the Social Security Administration, or they're not getting the right answers. I want to relay the story to you, a very important story that I always tell clients about Social Security. I'm an accountant. I have accounting and tax practice, and every year for the past 40 years, I've attended an end-of-year getting ready 2-day seminar for tax season, which the presenters who are accountants themselves, practicing accountants with big firms, talk about the changes in the tax law. But every year, 1/4 of the 2-day presentation, half a day, is presented to Social Security issues, topics, including applying for benefits. What type of benefit will a person get? And the reason they do that, they point out to us, the people who present these tax seminars, is that your clients, when they come in for tax season, they're going to ask you questions about Social Security. And the reason they're going to ask you is because they don't know where to go to when it comes to getting their questions answered with Social Security. So I hear this every year, but I guess for the past 40 years, go to these getting ready for tax season seminars, and I hear different topics, and one of which every year, 1/4 of one day, one of the 2-day seminar is talking about Social Security. So here comes my story. A couple of years ago, I had a couple, I do their taxes, and they're both one spouse is a retired federal employee. Right now he's about 68. And his wife is also a federal employee, not retired, and she's close to retirement. So one tax season they came in and said, we want to ask you a question about Social Security. And we heard something about spousal benefits and that maybe one spouse can get half of the other spouse benefit. And then there's some benefits about delaying your Social Security. We heard something about that. We'd like to ask you a question. I said, well, what's your information? So they gave me the question, and then when I gave them the answer, it says, now, you know something? We're thinking about this. You're an expert on taxes. How do you know so much about Social Security? I said, well, I've been, as I mentioned, I attend these webinars, these end-of-year tax seminars. Well, that doesn't make you an expert. So how do we know that the answer to our questions are correct? I said, I'll tell you what, do me a favor. do me a favor. And this was like, I think 2 years ago, two or 3 years ago. Do me a favor. Why don't you call the Social Security Administration with your question? But here's how I want you to do it. Make sure, number one, that you present all your facts. The people at Social Security have to hear all the information about your age, whether you've been covered with Social Security your entire life, what your whole situation, and be very specific about your question. And then what I want you to do specifically is I want you to call Social Security Administration on 3 different days, different times of the day, and compare. And then after you have completed those calls, those 3 calls, you're going to get 3 different people from Social Security. Compare the answers. Just compare the answers and see what happens. And then please get back to me. So after they did that, they come back to me and said, you know, something is very funny. We got 3 different answers depending on the person we talked to at Social Security. You got 3 different answers? Well, which one is right? We don't know. We don't know. Ladies and gentlemen, this is an example. And it's gotten worse now. The Social Security Administration has been cut back. They've cut, their staff has been cut. So as much as 25%. There are fewer people answering the phone. I wrote a column, Dan mentioned I write the columns for serving the service called the Fed Zone. And about a year ago, I wrote a column. I'm going to bring a copy of it. It's entitled Customer Service Nightmare Looming Over the Social Security Administration. This is dated February 21st, 2024. It's gotten much worse. You're going to be on the phone probably from 3 to 6 hours before someone's going to pick it up. If they pick it up, if your call. And you may not get any answers or the wrong answers. That's why we want to make sure that we are giving you the right information. We do this seminar, and I promise you, the information in what I'm going to present over the next couple hours is true. All the information, all the facts you need to know about Social Security, including what's going to, how your benefits are calculated, when to start taking Social Security, spousal benefits, survivor benefits, everything you need to know. So please sit back, take in the information, and as Dan said, if you have, you want to have a follow-up meeting with serving those representatives, all of whom are very, very aware of Social Security and can answer your questions, please do so. I want to just point out some important websites here before I actually get started. The first website, the first bullet there, www.ssa.gov. That's the Social Security website. Among the things on that website are forms and publications. Also on the website there is hopefully your account. Have you set up your own account on the Social Security website? If you haven't, you go to www.ssa.gov/myaccount to set up your own account. Now, why should you set up your own account on the Social Security website? Reason number one, to view your benefits. It used to be that the Social Security Administration, when you turn age 40 years old, and I remember when I turned 40, 35 years ago, I got my first Social Security statement, and then you would send it out every 5 years. They just tell you what your current benefits are. Now, what do I mean by your future benefits are? Yeah, if you file it when you reach your full retirement age, what are going to be your family benefits? What are going to be survivor benefits? Things like that. And your earnings history. Well, the Social Security Administration would cut back, and the Social Security Administration has really basically done away with these mail benefit statements. They no longer have been, and the mail, of course, got very poor, so they really did away with it. So the only way you can view your benefits, see your benefits, is having your own account. The second reason is the reason you should have your own account Social Security is when you apply for Social Security, when you apply for Medicare, you don't make an appointment at a Social Security office to apply for Social Security or Medicare. Then it takes them months to process your application. You do it online, it'll take them weeks. We're going to talk about the application process. So please, if you have not done so, set up your own account on the Social Security website. There it is again, www.ssa.gov/myaccount. Then talking about, I'm going to have a sample a statement here in a few moments. Also on the screen there, the third bullet, www.fed-zone.com. As Dan mentioned, I write a weekly column for serving as a service called the Fed Zone. I write one column a week, every week of the month, every month of the year, on average, about 50 to 60 columns. On what topics? I write columns on employee benefits, including CSRS, FERS. I've written many columns on Social Security, many columns on the FERS savings plan, on all the insurance benefits that federal employees have, including the federal employee health benefits and Medicare, life insurance, dental and vision insurance, long-term care. I've written columns on tax planning for retirement, survivor benefits, and estate planning. You name it, I write about it. I've been writing these columns on behalf of Serving as a Serve since April 2019. Over 7 years, I've been writing these columns, and every column I've written in the Fed Zone has been archived. If you have a particular subject you'd like to read about, like Social Security, I've written many columns on Social Security. All you need to do is go to www.fed-zone.com under the search engine. Put Social Security, and every column I've written over the past 7+ years will pop up. I want to emphasize the fact that the way I write my columns is so that you, the reader, understands them. Nothing high-powered, down to good information. I'm saying that because a lot of your questions about your employee benefits can be answered just by reading columns. You know, in this day and age in which human resources offices, personal offices have been cut back, the people who work at personnel are overwhelmed. They don't have time to answer your questions. Some of the questions you ask them, they're not in any position to answer them. They probably don't know anything. They don't know anything about Social Security to be able to answer your questions. Well, now you do have a place to get your questions answered. And if you are a retiree, ditto. I mean, if you're a retiree, you got questions about your retirement benefits, whether it's your CSRS annuity or FERS annuity or TSP, even Social Security. Again, it's very difficult to get those questions answered. You also have a place to get your questions answered. All right. So this is an example of one of my columns, Customer Service Nightmare Looming Over Social Security. If you want to read that column, I have the link up there. If you want to take a camera shot, you're more than welcome to do so. All right. So now let's go ahead and talk about Social Security. I mentioned a few moments ago about the benefit statement that you can look at 24 hours a day, 7 days a week. Now, what is this benefit statement? I have a sample one up here on the screen. Okay. Here is the first page. And I point out what everything means. Retirement benefits. Here you'll find whether you qualify for retirement benefits and what your full retirement age. And the person here, in this example, this benefit is someone named Wanda Worker. Wanda Worker. Wanda Worker was born in April 1962. This statement is actually dated January 2nd, 2024. So this is the year that Wanda Worker turned 62. And what the statement says here, what's included in the statement here is, like I said, her retirement benefits. And it says you have earned enough credits to qualify for retirement benefits. To qualify for benefits, you earn credits to your work, up to 4 each year. Now, what does that mean? What does that mean? You've earned enough credits. In order to receive what's called a Social Security retirement benefits during your working lifetime, which may have started in your late teens, may continue in your late, up into your mid-60s, you have earned a minimum 40 credits of Social Security. 40 credits of Social Security. Once you have earned your 40th credit of Social Security, you are now classified as being fully insured. Fully insured means you can get your own benefits, retirement benefits, disability benefits if you get disabled. You also are able to, upon your death, provide survivor benefits for eligible family members. Who are eligible family members? They include a spouse. It's called a widower benefit. If you have children at the time of your death who are younger than age 18, they get this survivor benefits. We're going to cover this all today. And also, being fully insured allows you to give what's called family benefits while you're living. Example, we have somebody who has reached age 62, has stopped working, got married late in life, and has some teenagers at home. Well, teenagers are younger than age 18, and because their parent is receiving Social Security, the teenager receives half of what their parents receiving. We're going to cover that all today. That's all part of being fully insured. All right. So these are because you have earned at least 40 credits of Social Security, you're able to you get your own benefit and you give survivor benefits and family benefits. Also, you're eligible for what's called disability benefits. Now, I want to tell you that Social Security is getting a little tough on who qualifies for disability benefits. Mean that you're not able to really work in any job and earn enough money because you have a certain disability, whether it's mental or physical. You just can't, you're not really able to earn enough, your full earning capacity. It's up to the point of your full earning capacity. We're not going to have any time today to talk about Social Security disability, but again, it's there if someone is fully insured and they qualified for it. Okay. And also we have on the earning statement is a personalized money retirement benefit estimate, depending on the age you start. As I mentioned before, once you have reached the minimum age to apply for Social Security retirement benefits, that's age 62, you can start receiving your Social Security retirement benefits as early as age 62. However, if you start taking your Social Security at age 62, you're going to have a permanently reduced retirement benefit. Why so? Because in reality, the earliest age you can receive a full Social Security check, a full Social Security retirement check, is something called your full retirement age. What is full retirement age? Well, that depends on what year you're born. I have a chart here. One second. Here we go. We have here, depending on year of birth, shows you what your full retirement age is. If you're born, let's say in 1941, it's 65 years and 8 months. I'm sure that no one is born that is listening to this. They're way past their full retirement age and receiving their benefits. If you're born between 1943 and 1954, your full retirement age is 66. I was born in 1951, so my full retirement age is 66. And then it increases again. Anybody born in 1955, it's 66 years and 2 months, and it goes up until anybody born after 1959, anybody born after December 31st, 1959, their full retirement age is 67. I know there are a lot of people who still think that 65 is full retirement age. Well, that was true until 1983. In 1983, the last major overhaul of Social Security, Congress raised full retirement age from 65 to 67. They did it gradually. Now, I want you to point out something about on this chart here that goes back to this chart. You can start taking Social Security as early as age 62. But as I said, your benefit is going to be reduced. How much? And this chart here, let me just move this here for a second. It says here, this column here, age 62 benefits as a percentage of full retirement benefits. So let's take somebody born in 1960 or later, whose full retirement age is 67. Like our example here, Wanda Worker. If Wanda Worker starts taking Social Security at age 62, remember she was born April 5th, 1962. Here it is, January 1st. That statement is dated January 2nd, 2024. She's turning 62 years old on April the 5th, 2024. She applies for her first Social Security check in May 2024. How much will she get? It says here, if she takes it, this column here says she'll get 70%. She has to take of what she would be entitled to had she started at her full retirement age of 67. That's a 30% reduction back here. Let's go back to this chart here. It says here specifically, at age 67, Wanda Worker, if she waited to age 67, she would get $2,000 $119 a month. If she started in today's dollars, she started taking Social Security at her 67th birthday. By taking it at age 62, she's going to get $1,465. $1,465 is exactly 70% of $2,119. Now, it's Wanda Worker's call here. Wanda Worker's call. When to start taking her Social Security. She doesn't have to take it 62. She can wait till 63. If she waits till 63, she's going to get a little bit more because she's closer to full retirement age. She can wait to 64, 65, 66. But the closer she is to her full retirement age, the less reduction. If she starts at age 67, no reduction. She's going to get the full amount of $2,119 per month. Now, you also should notice the following, that your statement says if you delay taking Social Security past your full retirement age, you'll get more. You'll get more. So it says that if Wanda Worker takes Social Security starting at her 68th birthday, she's going to get $2,291. That's exactly 8% more compared to taking it at age 67. Now, what is this all about? We have here this column. It says delayed retirement credits. Let me explain what delayed retirement credits are. Delayed retirement credits means that for every year you wait past your full retirement age, Social Security will increase your benefit by 8%. If you wait 2 years past your full retirement age, if your full retirement age is 67, like Wanda Workers, you'll get 16% more. It's a guaranteed increase of 8% per year. For 2 years, 16%. And finally, if Wanda Worker waits till 70, and that's the last age, Social Security will increase your benefit. If you wait till 71, it's a waste because they're not going to give you any more. If she waits till her 70th birthday, she'll get 24% more in a monthly benefit compared to if she started her Social Security monthly benefit at age 67. That is reflected here, right here, at age 70. If she starts taking Social Security at age 70, she's going to get $2,634 per month, which is exactly 24% more compared to starting her Social Security at age 67 of $2,119 per month. Now, I want to ask you I'm going to put a question out there. I want you to think about it because I get this question so often. Ed, when should I start taking my Social Security? And specifically, somebody says to me, what are the advantages of taking it early, before your full retirement age? Are there any disadvantages? Well, I know one disadvantage is that when you start taking your Social Security before your full retirement age, your benefit is permanently reduced. In Wanda Worker's case, if she started taking her Social Security at age 62, rather than at 67, that is what, a 500, I'm looking here, that's about a 500, and there's a reduction per month of, one second, about $654 per month. $654 per month if she takes it to her Social Security 60. That $654 per month reduction is permanent. In what sense is it permanent? If Wanda Worker, let's say, is married, and her spouse's Social Security is a lot more than hers, and it turns out that half of her spouse's Social Security is more than her own, if her spouse is drawing Social Security, she can get half of her spouse's. However, because wander worker, started her Social Security at age 62 and was subject to that permanent $654 reduction, that $654 reduction will be applied to that spousal benefit. In other words, it's going to follow that $654 benefit is going to follow wander worker for the rest of her life. We're going to talk about that later on. We talk about spousal benefits. All right. So this is all the information. This is on page 1 of your Social Security statement that you get every year. And it's updated every year. As you continue to work, your benefits are constantly being recomputed. And talking about why you work, page 2 is a history of your earnings history. We see here on page 2 your benefits, it says here, when did you work? What are your work years? And it says earnings tax for Social Security. I know, what is it all about? If you look at your W-2 statement, look at your every year you work, you get a W-2 from your employer. When do you get that W-2? Usually in January following the year you work. For example, you got your 2025 W-2 statement in January 2026. It seems like what most people are interested in is that box 1 of your W-2 statement, which is taxable wages. You need that to file your income, to prepare and file your income taxes. And then box 2 says federal income tax return. Everybody seems to be interested. But a lot of people don't look at box 3. Box 3 of your Social Security statement, it says Social Security earnings. And box 4 says FICA tax, the FICA tax you pay. Now, what's this got to do with your statement? Ladies and gentlemen, what you see here, for example, in the year 2001, wander worker was working and her Social Security wages was $34,147. Box 5 shows her Medicare earnings. What is that? That's box $34,147 is in box 3 of her W-2 statement, and the Medicare wages is box 5. Now, what is this all about? Remember I was talking about earning credits a few moments ago? We're going to talk about here in a few moments, what is an earnings credit? What is an earnings credit? An earnings credit, means you earned enough money, paid the FICA tax, and you got that credit. You only have to have 40 credits to be fully insured. The most credits you can earn per year is 4, so you have to be working a minimum 10 years to get that 40 credits. But here's the point I want to make, and we're going to see this later on, that Social Security is constantly, every year, they are recomputing your future retirement benefits. And how do they recompute your benefits? They look at your earnings history and they pick out the 35 highest years of Social Security earnings. It's not consecutive. It's the 35 highest years, no matter when they occur. So as you continue to earn more money, your wages are going up, for one reason or another. Your benefits are going to keep pace. They're going to go up as well. The point I want to make here is that take your 2025 W-2 statement. Your agency, your employer, sent a copy of your W-2 statement to the Social Security Administration for the year 2026, for your 2026 Social Security wages. Is it possible that that your agency, your payroll processing office, may have made a mistake in reporting your Social Security wages? The answer is unfortunately yes. And whose responsibility is to check to make sure that Social Security is receiving the right information? Yours. So your first assignment here is that we're getting to the time of year, middle of 2026, that maybe if you have your benefit statement, you have an online account, please check not only page 1 of your statement, but look at page 2, so that your Social Security wages earned in 2025, as shown in box 3 of your W-2 statement, has been reported correctly to the Social Security Administration. And if it is not, please get it corrected. Because if it's the wrong amount, it's going to throw off your future benefits. So please do that. All right. Okay. Let's scroll back here. I want you to also look here on this page 2 here of your Social Security statement. It says total estimated Social Security and Medicare taxes paid over your working career based on your earnings record. Social Security says that one worker paid during her working lifetime, if you add up all of the FICA taxes she paid based on these wages, FICA tax is equal to 6.2% of your wages. Employee pays that, and the employer matches that. And so over the years, during one worker's working lifetime, she has paid a total of $75,568 in FICA taxes. Her employers paid about $2,000 more, $77,498. And she paid in Medicare tax, that's the hospital insurance tax, less, because that's 1.45%. But here, I want you to look at this. Okay? So, Wanda worker paid during her working lifetime a total of $75,568 in Social Security taxes. Okay? And we saw in her statement that at her full retirement age, she's expected to get $2,119 per month if she started taking her Social Security at age 67. Over 12 months, how much will she get over the year? If you multiply 12 times $2,110, you come up with $25,428. So here's the question I have. Given the time we're at here in 2024, if she has paid a total of $75,568, and if a wonder worker were to start drawing her Social Security at $2,100 a month, how long would it take her to get that money back? Divide $75,568 by $25,428. It'll take her a little less than 3 years to get those FICA taxes back. Little less than 3 years. We hope and pray to dear God that if Wanda worker were to start drawing her Social Security at 67, she'll live past age 70. Let's hope and pray. Okay? Doesn't take long to get your money back. All right. Okay. All right. So just want to review again the types of benefits that Social Security offers. There is the Social Security retirement benefit. There's the Social Security disability benefit. There are survivor benefits, and there is Medicare. Medicare is part of Social Security. Social Security started when in 1940. Medicare started, the original Medicare Part A and Part B started in 1965. Now, to qualify for benefits, as I mentioned, being fully insured for Social Security, being fully insured for Medicare, one has to pay these payroll taxes. For Social Security and Medicare, the payroll taxes can be summarized in 5 letters. OADSI. These are the Social Security Medicare taxes. If you look on your statement of earnings and leave, you're a FERS employee or you're a CSRS offset employee, not a CSRS employee, because CSRS employees are not subject to covered by Social Security. So if you're a FERS employee or a CSRS offset employee, look to see if you see those 5 letters, OADSI. OADSI. What does that stand for? OA is old age. D is disability. The FICA tax, which FICA stands for Federal Insurance Contribution Act, is equal to 6.2%. 6.2%. Of the 6.2% that an employee who's covered by Social Security has to pay, 5.4% is applied to their wages, matched by their employer, in this case the federal government, and that money is deposited into what's called the Social Security Retirement Trust Fund. Then 0.8% of their wages, 0.8% is applied to their wages, matched by the employer, in this case the federal government, and deposited into the Social Security Disability Trust Fund. So the employee pays 6.2%, and so does the agency, up to what's called the maximum wage base. the maximum wage base. Maximum wage base. In 2025, that maximum wage base is $184,500. $184,500. What does that mean? It means that if we have, let's say, a FERS employee who is earning, let's say, $190,000, their wages are $190,000. When they reach their Social Security wages reaches $184,500 sometime during 2026, their agency stops taking out the FICA tax. Until when? Until 2027, January 1st, 2027, when it starts all over again. And the Social Security wage base will be obviously going to be raised for 2027, so it might be $190,000. In 2025, it was $176,000. Without inflation, it's going up more rapidly than it did when we didn't have inflation. All right, so that's the OAD. S, survivor benefits. Now, if you are either a CSRS employee or a CSRS offset employee, a FERS employee, when you retire from federal service, you're allowed to make an election to give what's called a survivor annuity benefit to one person. To one person. Who is that one person? Someone who has an insurable interest in you, which includes a spouse. It could be to a child. It could be to a sibling. It could be to a dependent parent. Only one person can get a survivor annuity benefit, and it's going to cost you. How is it going to cost you? You will take a reduction, a permanent reduction in your annuity. Now that's CSRS and FERS. Social Security is different in the following sense. Number one, we have multiple family members who are eligible for survivor benefits, including a spouse, widower benefit, a child under the age of 18, a dependent parent. If the person who's is eligible, is fully insured, dies, then these multiple family members can get survivor benefits. And here's what you have to know. It doesn't take anything away from the person who is receiving Social Security. They don't take any reduction in their benefits in order to give survivor benefits to these multiple family members. There's no reduction to theirs. So that's the big difference. There's no reduction in benefits. S is zero survivor benefits in terms of reduction, in terms of any taxes, any reduction to their own benefit. And finally, Medicare. Medicare. We are talking about the hospital insurance tax, HIT. How much does it equal to? 1.45% of one's wages with no upper limit, matched by the employer, the federal government. So the rule is that everybody is covered by Medicare. It has to pay what's called the hospital insurance tax, whether you're a CS or the FERS. And if you've been paying that Medicare payroll tax for a minimum of 10 years, any 10 years during your working lifetime, that makes you eligible for Medicare Part A, hospital insurance tax at no cost. When you apply for Medicare, usually at age 65, you apply for Medicare Part A, no cost. It's hospital insurance, pays for stays in the hospital. If you're eligible for Medicare Part A, it makes you eligible for the other parts of Medicare. Medicare Part B, medical insurance, Medicare Part C, Medicare Choice and Medicare Advantage plans, and Medicare Part D. All right, so that's a summary of the time periods. So, federal employees, how do they qualify for Social Security benefits? FERS employees, FERS office employees, because they're covered by Social Security. FERS employees are not covered by Social Security, so if they want to earn their 40 credits, they're going to have to do it some other way. Either they earn some Social Security credits maybe before they entered federal service, maybe they served in the military, maybe they had some work in private industry, they retired from federal service, they got a job in private industry. That's how I earned mine. I was a CSRS employee for 32 years. I earned my Social Security credits before I became a federal employee. I also became self-employed for my business and been still self-employed. And as a self-employed person, I'm obviously covered by Social Security. Another way if there's a larger benefit, is through a spouse's benefit or through a former spouse's benefits. We're going to talk about spousal benefits for those of you who are married and both of you are covered by Social Security. It may be that you're better off taking half of your spousal security. We're going to talk about when you would do that. If you are married, let's say you have a stay-at-home mom or dad who really doesn't have any Social Security earnings, so they have not earned the minimum 40 credits, it is possible that when you're drawing Social Security, most probably likely, that your spouse will be able to receive half of yours, even though they don't have less than 40 credits of Social Security. We're going to talk all about that later on when we talk about spousal benefits. All right. Right now, I want to get back to this question that I posed a few moments ago regarding when do you take Social Security? When should you start taking Social Security? We gave you all the possibilities here. Take you, at age 62 or at your full retirement age or in between, waiting till 70. What is a good age to take Social Security? Just a review here. You're eligible for Social Security retirement benefits after earning a minimum 40 quarters of coverage, 40 credits. Okay? You're eligible to receive those benefits if you've got that 40 credits of security. Now, I also want to tell you that the 40 credits, the minimum, only gets your foot to the door. The more you pay into the system, the longer you pay, the more you earn, the higher will be your benefits. Okay? Again, the question on the table is, when should you start taking Social Security? The question was, again, what would be the advantage of taking Social Security starting at age 62? Well, one advantage is you may need the money. Maybe you lost your job. Unfortunately, their federal employees over the past year or so, the cutback in federal workforce, lost their jobs. They were not eligible to retire, and they left federal service, maybe in their early 60s. 62, 63. And if they were able to retire, they didn't get much of a pension because they didn't work that many years, didn't have that much money in the TSP. Here, the economy is not so good, can't get another job, inflation's up. What do they have to do? Well, they got to pay their bills, so they might as well start taking Social Security, right? What's the disadvantage? It's going to be a reduced benefit because they're taking it before the full retirement age. Okay? On the other hand, if they wait at least until their full retirement age, they'll get a full benefit. And if they wait longer, they get a higher benefit. What's the advantage of taking Social Security as late as possible? You'll get more money for the rest of your life. Is there any disadvantage of taking Social Security past age and starting at age 70, where you get the maximum benefit? Well, to answer this question, let's look at Wanda Worker's situation. We said when we looked at her statement that if she takes Social Security starting at age 67, she's going to get $2,119 per month. That's starting at a full retirement age. No reduction. If she starts taking Social Security at age 62, she's subject to that 30% reduction. She's going to get $1,465 per month. The way I figured it is that if Wanda Worker starts receiving her Social Security at age 62, over the next 5 years, from age 62 to age 60, that's 5 years, that's 60 months, she will accumulate how much money? Take $1,465 per month times 60 months is 5 years, she would accumulate $87,900. Notice I'm not including any of the COLAs, they're not, it's really insignificant in my opinion what the COLAs are, so just look at the real numbers here. On the other hand, if Wanda Worker starts receiving her benefits at age 67, how long will it take Wanda to recover the $87,900? Now, she didn't get the $87,900 because she started at age 67. So by taking the difference between $2,119 and $1,465, or $650, divide $654 into $87,900, you come up with 134.4 months, which is 11 years and 2 months. What does that mean? What does that mean? It means that if Wanda Worker were to start drawing her Social Security starting at age 62, and if Wanda Worker were to live past 78 years and 2 months. How did I come up with that? At 11 years and 2 months to age 67, you come up with 78 years. Yeah, 78 years and 2 months. If she lived past age 78 years and 2 months, she made the wrong decision. She only have made the right decision if she died before reaching 78 years and 2 months. Let's turn this around. Suppose Wanda Worker waits till age 70 to take Social Security. Remember that enhanced 24% boost to her benefit. She waits till age 70, she's going to get $2,634 per month. The way I figured it, if Wanda Worker starts taking Social Security at age 67, from age 67 to age 70, that's at a total of 36 months or 3 years. She's getting $2,100 per month times 36 months or $76,284. If Wanda starts receiving her benefit at age 70, how long would it take Wanda to recover the $76,284 that she didn't get because she started drawing it at age 70? Take the difference between $2,634 and $2,119, which is $515. Divide 515 into $76,284. You come up with 148.12 months, which is 12 years and 4 months. What is the conclusion of this? If Wanda Worker were to start drawing her Social Security at age 70, and she were to live past 82 years and 4 months, that's 12 years and 4 months added to age 70, she lives past that, she made the right decision. If she dies before that, if she dies before 82 years and 4 months, she made the wrong decision. Now, obviously the question of when we're going to die, we don't know. We don't know. Unfortunately, people are dying in their 50s and 60s. We just don't know. It just, take something like COVID. I have colleagues of mine, my age, 75 here, very sickly, just hanging in there basically from day to day, and may pay to take it as early as possible. Take it as early as possible. That's what I advise. But I will tell you this. The question of when to take Social Security comes down to need. Do you really need the benefit? Do you really need to take your Social Security benefit, or can you afford to wait? Obviously got to pay your bills. And the other factor is your health. Because people who generally are very sickly in their early 60s do not really expect to make it to 80, probably are better off taking Social Security. Another relevant question for federal retirees is, when it comes to taking Social Security, when should they start taking Social Security? Should they start taking Social Security before taking money out of their TSP? Or should they wait to take Social Security as long as possible, age 70, and start drawing from their TSP? And I break it down to this. There are two types of TSP accounts: traditional TSP and Roth TSP. In my opinion, Roth TSP is off limits. One should not touch that as long as possible. I say that because the Roth TSP, you never have to take it out. There's no required minimum distributions when it comes to your Roth TSP. You could let it sit there forever, like the Roth IRA, and use it as an account. It's nice to know that if you have to take money out of the Roth TSP, you can, and it's not going to be taxable. It's not subject to RMDs. On the other hand, the traditional TSP is fully taxable, and it's subject to required minimum distributions. When you reach your required beginning date, which is now 73, it will be 75 for anybody born after December 31st, 1958. It will be 75. And that RMD is fully taxable. The more money you have in your traditional TSB, the more taxes you're going to have to pay. It's going to may affect other bit. It's going to affect what you're going to pay for Medicare Part B because it's including your income. By starting to take your traditional TSB, let's say in your mid 60s, it will reduce your future RMD. Meanwhile, you're not taking Social Security. You're leaving it alone. You reach 70, you'll have that 24% enhanced benefit. Every year you wait past your full retirement age, you get 8% more guaranteed. I can't say that about any investment. No one out there can tell me, about an investment that guarantees you 8% return. Guaranteed. That includes the TSB. You can't, if somebody says to you, well, if you give me your TSB account, roll over to an IRA, I promise you I can get 8%. They're lying to you. They can't guarantee it. But Social Security is guaranteed 8% more. Very hard to pass it. One last thing here before we're going to take our questions here a little bit. I'm going to say something about these credits. I want to mention one more thing about credits. I said you had to have that 40 credit. What's a credit of Social Security? As I mentioned, you work in a job covered by Social Security, earn a minimum amount, and you pay the FICA tax. Now, what is that minimum amount? Well, I will tell you back before 1978, in order to earn 1/4 of coverage, 1/4 of coverage. Back then they called them quarters of coverage because the years divide up into 4 quarters: January 1st to March 31st, April 1st to June 30th, July 1st through October 31st, and we have October 1st through December 31st. So July 1st is June 30th, and July is the third quarter, the beginning, and the fourth quarter is October 1st through December 30th. So the years divide in 4 quarters. Back before January 1st, 1978, in order to earn your maximum 4 quarters of coverage per year, you had to earn at least $50 in a job covered by Social Security in each quarter of the year. Let's do an example. Here it is. July and August 1975, you were between your freshman and sophomore year of college, and you didn't work during your academic year. You just want to get a job. You wanted to get a job for the summer just to earn enough to pay for books and tuition. So you got yourself a job in July and August 1975, and you earned a whopping $200, and you're so proud of yourself. So how many quarters of coverage did you earn for the year 1975? 1. But you're saying 4 times 50 is 200. Why didn't you get 4 quarters of credit? Because you only worked at 1/4 of the year. Well, then Congress changed the rules. They said, Congress, we don't care when you earn the equivalent of 1/4 of coverage, 4 quarters of coverage. You can earn the equivalent of 4 quarters of coverage. In fact, now we're going to call them credits. You can earn the equivalent of 4 credits a year in an hour, a day, a week, a month, or spread it throughout the year. We don't care. Well, you see up there in 1978, it took effect January 1st, the minimum you had to earn to get 1 credit Social Security was $250. Get your maximum 4 credit Social Security for the year 1978, you'd earn $1,000 anytime throughout the year. So, back to yourself here. 3 years later, this is the summer of 1978, you're just graduated from college, and now you are going to go to law school, medical school, graduate school, whatever, and you had to earn enough to pay tuition. How much was tuition? $1,000. You got yourself a job in July and August 1978. You earned $1,000. So how many credits Social Security did you earn? 4. 4 times 250 is 1,000. You got your 4 credits. Go down to 2026. How much do you have to earn to get your 4 credits Social Security? 1 credit is $1,890. So to get your 4 credits Social Security, you have to earn this year a minimum $7,560. 7,560. As we're speaking, we're in the middle of the year. It's June 2026. Anybody listening today is still working. I bet you earn your $7,560 of wages probably sometime in February, maybe early March. So you've earned your 4 credits of Social Security for the year 2026. Does that mean, I'm sure you're earning more than that this year. As far as Social Security, you're not going to get any more benefit from Social Security. Your future benefits will not increase because you earned more than the minimum 4 credits? No, on the contrary. The more you earn on Social Security, the more your future benefits will increase. And it's not only that even when you start drawing Social Security, here you reached your full retirement age, and you decided, I'm going to start drawing my Social Security. I know there'll be no reduction. I'm not going to wait. I'm going to start drawing it. You may be still working. If you're younger than your full retirement age, you shouldn't be drawing Social Security, because Social Security has a rule. If you're younger than full retirement age and still working, you can own and you decide you want to start drawing your Social Security. Here you are, 62, 63, 64. You want to start drawing Social Security. You can only earn a certain amount without losing your benefits. It's called the earnings test. We'll see this later on, what the amount this year in 2026 is, as far as the earnings test. Once you reach full retirement age, there is no more earnings test. You can work, earn as much as you want, draw your Social Security, no reduction. But more importantly, because you're earning more now than you did earlier in your working career, your benefits will go up. Social Security every year is recomputing your benefits. And what they're doing is they're looking at your 35 highest years of earnings, no matter when those earnings were. These are Social Security earnings. And if you continue to work, your benefits will go up. Your benefits will never go down. If you stop working, they're not going to go down. You get the minimum each year, they go up by a COLA. But you have to realize that even after you retire, let's say from federal service, you get yourself a job, you're earning more now than you did 35 years ago. You probably will. Your benefits will go up retroactively. I'm living proof. I started taking my Social Security when I was 7 years old, 5 years ago. And I'm self-employed. I'm still working. And every year in October, this has happened for the past four years, I get a letter from Social Security. We recomputed your benefits. We note that you're earning more than you did 35 years ago. You know what I was earning when it came to Social Security 35 years ago? 0, because I was under CSRS back then. I was not paying into Social Security. So every year, my earnings are much, now are more than 0. Even when I started paying Social Security, I was self-employed. I wasn't paying that much in. The benefits are going up retroactively. So, ladies and gentlemen, hopefully you'll understand that Social Security is constantly looking at your earnings record. Even when you stop working, your benefits will go up. But after you start drawing your Social Security, you may say, well, I always can use a little bit more. Well, get yourself a part-time job if necessary. Give me one.
I want to pause here briefly to share some examples of the questions that we often hear at this point in a live webinar. These are exactly the questions we're going to address in that part 2. Just remember, you can scan the QR code to schedule or email us at part2@swserve.com. What I'd like to do now is tell you a little bit more about the part 2 process that Ed's mentioned a couple of times. So first, a little background. Part 2 came about as a result of our observation here at SWS over the decades that people come to trainings with questions like, what is it and how does it work? Then the information starts to flow. And then those questions morph into, what is mine going to look like? How's it going to affect my family? And that is exactly why we created part 2. So part 2 is what we call personalized education. And the focus is on education. It consists of 2 complimentary, no obligation meetings with one of the advisors deserving of serve to review your benefits. So today we're learning about Social Security, but we believe no retirement decision exists in a vacuum. All of these plans can influence your retirement. So we are going to discuss everything. And to do so, we're going to create a comprehensive report covering all your retirement benefits. The first meeting is going to be data gathering. We're going to ask you to bring some information. Then at that second meeting, we're going to review with you in detail that benefits report. So obviously, we're going to do some pension projections, but we'll also talk about TSP, FEGLI, health insurance, Medicare, survivor benefits, and of course, Social Security, all included in the report. What I'd like to do here, though, is a little compare and contrast between the report that you're used to from your HR. Those HR reports are fantastic. They're incredibly accurate. But I have one beef with all of them. They only show a single year of retirement, the first one. And God willing, you're retired for a whole lot of years. So by contrast, our report goes much further, actually all the way out to your age 90. And we'll also give you multiple scenarios for different retirement dates as we're projecting out of the longer term what your retirement might look like. In addition, with regards to Social Security, those HR reports, some of them will include a summary. And yes, you can always log into SSA.gov to track down more information. But our report is going to bring Social Security and the pension together and also show you what future cost of living adjustments might be. And that is really important. So to sum up, we'll cover Social Security, cover the pension, cover survivor benefits, FEGLI, health insurance, TSP. Folks always have a ton of questions about TSP, especially this year. Traditional TSP, Roth TSP, Roth conversions, in-plan Roth conversions. How the heck should I get my money out of TSP? Those are all things we can talk about in these meetings. And again, there's no obligation. So Ed and I encourage folks to take advantage of this. We've never met anybody that didn't learn something from a part two. And best of all, the meetings are held over Zoom, so you don't even need to go anywhere. You can schedule them at times that work with your calendar. Early in the morning, evening, even some weekends. So to schedule your part two session, simply scan the QR code you see on the slides or email us at part2@davidserv.com and we'll send you a calendar link. You can choose a great date and time. And with that, Ed, I'll kick it back over to you, sir. Take us into that next hour.
Thanks very much, Dan. Great information. Ladies and gentlemen, we really encourage the part two process. As Dan said, I completely concur. We have never encountered anyone who was disappointed in the part two process. You have questions, we're here to answer them. So please take advantage of it if you have not already done so. And again, it's very important that you learn as much as you can about your benefits, and this is the best way to do so. All right. Thank you, Dan, for that information. All right. So we're going to talk briefly about this calculation of one's Social Security retirement benefit. I hinted that earlier when I was talking about looking at your earnings history. Social Security is looking at that to determine your benefits. Just want to delve into this a little bit more. Let's read what it says here on the screen. All Social Security retirement benefits are based on one's primary insurance amount. Primary insurance amount, the PIA. If I have to define what the PIA is, the PIA is the amount of an individual's monthly Social Security retirement benefit at that individual's full retirement age. Full retirement age. We looked at an example here at Wanda Worker's Social Security statement, and we said that because she was born in 1962, her full retirement age is age 67. And on her statement, it showed at age 67, her monthly benefit is $2,119 per month based on her earnings history to date. Now, if she took Social Security, remember at age 62, she's subject to that 30% reduction. That $2,119 is her PIA. It's the amount of her monthly benefit at her full retirement age in today's dollars. What today, I don't mean 2026, that statement was dated, I think, January 20th, 2024. So if Wanda Worker were to start taking Social Security at her starting at age 62, she's getting 70% of her PIA. If she takes her Social Security at age 70, she's going to get 124% of her PIA. Again, the PIA is the fulcrum. Now, Social Security every year is calculating the PIA. And they do that by calculating what's called one's average index monthly earnings. We're going to talk about that in a moment. Before we do that, we're going to take a slight deviation here because What the PIA does not include is extra earnings credits for those individuals who served in the military between 1957 and 2001. If you are a veteran and you served on active duty anytime between 1957 and 2001, what I'm going to say here applies to you, or maybe you know someone who did. You're going to get extra earnings credits for the years that you served on active duty. Now, don't have a lot of time to talk about this, but I am going to say this. For those of you who served on active duty between any time in 1957 and 2001, or you know someone, a spouse, a friend, a relative, whatever, I suggest that you or whoever you know who is serving active duty, to go to the Social Security website and download a two-page publication. It's entitled Military Service and Social Security. Military Service and Social Security. Go to www.ssa.gov and just put in the keyword Military Service and Social Security, and this two-page publication should pop up. And what this publication talks about is that when you were on active duty, you got paid. You got paid, of course, in the active duty. Ever since January 1st, 1957, anybody who served in the military active duty paid the FICA tax, paid Social Security tax. They're being paid for their active duty time. They get their wages are subject to all payroll taxes, including Social Security. All right. But when you served on active duty, you had certain benefits that were added to your paycheck that were not taxed, including travel allowances and housing allowances. Those were extra things that you received, that the benefits you received, and they're added to your paycheck, the cost of housing, an allowance for your housing costs because you moved overseas, whatever, moved out, temporarily. You had travel allowances, you traveled to be on active duty. Those allowances are not subject to any type of tax, federal tax, state tax, or Social Security and Medicare taxes. Nevertheless, Social Security will give you credit for earnings purposes. Remember I talked about looking at your earnings history? Well, your earnings history when you were on active duty only included your wages. These allowances will be added to your existing earnings for purposes of calculating Social Security benefits. And how much are they? Okay, let's see what it says here. Let's read what it says here in this publication. If you served the military after 1956, you paid Social Security taxes on those earnings. Since 1988, inactive duty duties in the Armed Forces Reserves have also been covered by us. Under certain circumstances, special extra earnings for periods of active duty from 1957 to 2001 can also be credited to your Social Security earnings record. From 1957 through 1967, if you served in active duty, we will add the extra credits to your record when you apply for Social Security benefits. If you served any time between 1968 and 2001, you don't need to do anything to receive those credits. The credits were automatically added to your existing earnings record. And after 2001, there are no special extra earnings credits for military service. Okay? How much extra is added? If you served between 1957 through 1977, you're credited with $300 in additional earnings for each calendar quarter in which you received active duty basic pay. If you served between 1978 and 2001, for every $300 in active duty basic pay, you're credited with an additional $100 in earnings for a maximum of $1,200 a year. If you enlisted after September 7, 1980, and didn't complete at least 24 months of active duty or your full term, you may not be able to receive the additional earnings. So, again, you should, if you are a veteran, please download this two-page publication from the Social Security website. If you know someone it is, to learn about this. The people I talk to, a lot of times clients, through taxes, are not even aware of this. I tell them it's up to your age because you're going to get these extra credits. You're going to get these extra credits, extra earnings credits added to your existing limit. It means more benefits. Your benefits may go up as much as $100 to $200 a month as a result of this. You won't, depending on how many years you served. How many years you served. So again, it's worth checking into. All right, back to calculation of benefits. We were talking about the calculation of the PIA. In order to determine one's PIA, and this is what Social Security is doing every year, no matter what your age is, they are calculating what's called your averaged indexed monthly earnings. Call it the AMI. To review here, your PIA is the amount payable at your full retirement age. In today's dollars, if you start your benefits earlier, benefits will be less than the PIA. Earlier than what? Your full retirement age. If you start your benefits later, what's later? After your full retirement age, up until age 70, you'll get 8% more for every year you wait. All right. How is the AMI calculated? Okay. What is the Social Security Administration every year? Well, how do they do this? Social Security is looking at your earnings history. That's why I said, look at your state. And they pick out the 35 highest years of the largest indexed earnings. We'll talk about index here in a moment, and add them up. Call these 35 highest years, no matter when they occurred, doesn't have to be consecutive. Call it T sub 35. Divide T sub 35 by 420. Why 420? Because we're talking about 35 years. There's 12 months per year, so 35 times 12 is 420. So the AMI is equal to the average index monthly earnings is the T sub 35, the total of the earnings, divided by 420. Let's look at what Social Security is looking at. Here is a chart. Here's a sample worksheet of Social Security when they compute your AMI year. Right here, all the way on the left side under column A is a calendar year. And what is the maximum taxable amount? Remember I said there's always a maximum tax Social Security wage base every year that wages that are subject to FICA tax. All right. So for the year 2020, it was $137,700. 2019, for 2021, I believe was 147,000 something. In 2000, it went up a little bit every year until recently it's been more. This year in 2025, it was 176,100. This year it's 184,500. That's what this column is all about. Then look at column C. Enter your taxable earnings. Where does Social Security get that information? From your W-2 statement every year. Box number. From your W-2 statement, box 3, Social Security earnings. That's what goes in this column here. Every year, Social Security realizes that there's inflation. And the further back you go, the amount that you earn way back when has been eroded by inflation. So they apply any wages you earned before the year that you turn 60 by what's called an index factor. This worksheet here is for somebody who was born in 1945. So they turned 60 years old, I believe, in 2005. Yes. And you notice here that the last year that they got an index factor was when they were 59 years old. That's in 2004, 59. So you go back here, the further you go back, their wages are being adjusted by the index factor to account for inflation. And then you multiply column C times column D, come up with column. Here's the index earnings. Ladies and gentlemen, look at column E here and mentally pick out the 35 highest years no matter when they occur. Add them up. And that's how you come up with the AMI. Okay? The Social Security Administration used the PI calculation because of Title II of the Social Security Act under the 1970 New Start method. Each calendar year, each covered worker with wages up to the Social Security wage base is recorded. The calculation of Social Security benefit starts by looking how long you worked and how much you made each year during your 35 highest years. Okay. So how do you improve your AMI? How are you going to increase your future benefits? The ultimate goal for prospective retirees is to maximize the AMI as the higher AMI calculation. The higher your retirement benefits, here are several ways you can increase the calculation of your benefits. Work more years. The AMI is based on your highest earning 35 years of work. If you haven't yet accumulated 35 years of substantial earnings, you can consider continue work until you've accumulated the maximum amount of years that are considered. Increase your income. Actively seek opportunities for higher paying jobs within your industry or field. This might involve job changes, promotions, or acquiring skills that make you more valuable to employers. Because the AMI is based on your highest earning years, you will earn greater benefits by increasing your increase throughout your career. Work full-time. While part-time or gig work may offer flexibility, it often results in lower earnings. To improve your AMI, consider working full-time throughout your career as a natural way to increase how much you earn each year. Maximize earnings early. The AMI calculation is progressive, meaning it counts lower earning years less than higher earning years. Concentrate on maximizing your income in the early years of your career, as these earnings will have a lasting impact on your AMI. In addition, on the assumption of steady career growth, your lowest earning years may still be a suitably high platform to grow off of. Delay retirement. If you can afford to delay retirement and continue working, you can accumulate more high earning years on the back end. This not only can boost your AMI, but also can result in large Social Security benefits when you do decide to retire. If you delay claiming benefits beyond your full retirement age, your monthly benefit increases until you reach age 70. The point I want to make again is that there's no limit here. Social Security does not cap your benefits, The more you pay into the system during your working years, the more you will ultimately receive in benefits. And even when you start drawing Social Security, you continue to work, your benefits will go up for two reasons. First of all, you always get cost of living adjustments. Even if you're not working, you get cost of living adjustments. But if you are working, you're getting a cost of living adjustment to your benefit, and your benefits will go up in addition because you're earning more money than you did early in your career. So again, it really pays to, work somehow, some way in retirement. Okay. And one last thing here, and this is something relatively new. It's been around for about a year and a half. The Social Security Fairness Act. There used to be two Social Security offsets that affected CSRS retirees. One of those offsets used to affect FERS offset retirees. And those offsets are called the Windfall Elimination Provision, WEP, that reduced a CSRS annuitant's own Social Security benefit, and the other and also FERS offset annuitant's Social Security benefit. And then there was also the government pension offset that most likely eliminated any type of spousal or former spousal or widow or widower benefit of a CSRS annuitant. I'm a CSRS annuitant, and until January 5th, 2025, which was the official when former President Biden signed the Social Security Fairness Act, eliminating the Social Security offsets, Windfall Elimination Provision, and the government pension offset. I couldn't get any of my wife's Social Security. Her Social Security is a lot more than mine. I couldn't get any of it because I was subject to the government pension offset. Now with the law, turns out that it turns out that half of hers is not more than my own, so I'm still taking my own, but my own is my full amount. So if you are a CSRS annuitant and you haven't heard about this, and you have a spouse, or you did have a spouse, your spouse is deceased, God forbid, you can draw on your deceased spouse's Social Security benefit, the full amount. If you are a CSRS annuitant and you're divorced from a former spouse and you're married to that former spouse for a minimum 10 years and you've been divorced for at least 2 years, and you have not remarried, you can draw on your former spouse's Social Security. No effect on theirs. Once again, you have to apply for it. It's like the lottery. If you don't play, you can't win. So please, if you have any questions about the Social Security Fairness Act, I suggest that you go to the Social Security website when your Part 2 meeting with a serving notice representative, talk about the Social Security with the person that's at serving notice to serve. Bring up the subject of the Social Security Fairness Act because this is particularly important if you are a CSRS annuitant to learn about the benefits you could be receiving. All right, let's now start talking about Social Security family benefits. Family benefits. What are Social Security family benefits? These are additional payments made to a member of a worker's family. What is a worker? A worker is defined as someone who is fully insured to Social Security, is entitled to their tier benefits, but they also have family. They're eligible for a percentage of the worker's benefit. Okay, and why are family members entitled to the benefit? Because supposedly this worker, they're drawing Social Security, they're not working anymore. Whatever reason, they're not working anymore. The person not working is age 62. They decided they don't want to work anymore. So the Social Security benefits that are being paid out to eligible family members is replacing their earnings. Okay, due to their being retired, maybe disabled. Maybe they are disabled and they can't work anymore. So the eligible family members are receiving a percentage of the disability benefits. Keep in mind that these family benefits do not reduce payments for which the worker himself or herself is entitled to. The amount of a benefit paid to a family member is dependent on the worker's calculated full benefits at their PIA. Now, if a family member, let's say a spouse, is entitled, has their own benefit, they can't get their own benefit and their spouse is half of their spouse benefits. They get the higher of the two, Let's talk about first spousal benefits. Spousal benefits. To introduce the subject of spousal benefits, I want to give you a true story. My late parents. My father had paid into Social Security his entire life. Shortly after coming home from World War II, he served in Europe with the Allied forces. He served in Europe, came home, and this is 1946. He got himself a job as a printer. He worked 37 years for the same company as a printer. 1983, he turned 65 years old, and he applied for his Social Security benefit. And he went to Social Security Administration and applied for his benefit. And Social Security said to him, your monthly benefit is 1983 is $1,600 a month. Now, that doesn't seem like a lot of money. Back then it was. But it was a lot more money compared to what his quote-unquote pension was. His pension for working 37 years was $150 a month. No COLAs, no health benefits, nothing. $150 a month. And he took actually a 10% reduction in his monthly pension in order to give a quote-unquote survivor benefit to my mother of $85 a month. So he was really thrilled with that $150, that $1,600 a month monthly benefit from Social Security. So he took it. So while he was serving overseas during World War II, my mother was working. And after he came home, they planned to have a family. So my mother got out of the workforce when I had an older sister who's since passed away. And she got out of the workforce, and she stayed out of the workforce. After having my sister. I was born about 4 years after my sister was. And she could stay out of the workforce until actually I went into junior high school. And she went back into the workforce. And she worked for probably another 12, 15 years. So when she turned 65, this is 1985, she had asked me, I'm thinking about applying for Social Security. What should I expect? I said, Mom, I wouldn't expect much. you didn't have that many years of earnings and your wages were not all that much, so don't expect much. So she was prepared. She went down to the Social Security Administration, applied for a benefit, and Social Security said to my mother, you're entitled to $325 a month. She said, $325 a month, that's nothing. How could that be? So Social Security said, no, here's your earnings history. Look at all those zeros. Look at the wages you earned. She said, I expected something small, but not that small. For then my mother pointed out to Social Security, oh, by the way, my husband's currently drawing. He's getting $1,600 a month. So Social Security, that person said to her, why didn't you tell us that in the first place? We would have checked what his benefits are. So they said, wait here for a moment. I'm back to the office. I came back and said, we apologize. You're not entitled to $325 a month. You're entitled to $800 a month. Why? Because half of your husband's $1,600, $800 is more than your benefit of $325. So we are going to add $475 to your benefit to bring you up to half your husband. It's called the dual entitlement benefit. What does that mean when it comes to spouses? We have a married couple. We have the higher earning spouse. We have the lower earning spouse or the no earning spouse. The rule is that the low earning or no earning spouse is entitled to the larger of their benefit or half of their spouse's benefit. If half of their higher earning spouse's benefit is more than their benefit, they get the half. Even if they don't have any credits of Social Security. So she took the $800 a month. My father's getting $1,600 a month. And that continued for a couple of years until my father died. At that point, my mother told Social Security, my husband died. So the Social Security said, now you'll take over his benefit, the $1,600 a month. Of course, you're going to lose your benefit. She understood that, so she got $1,600 a month, and that continued until she died a few years after that, and that ended the benefits. Now, let's suppose my father had decided, I'm going to change this a little bit. Suppose my father had decided in 1983, I'm 65 years old. I'm thinking about delaying my Social Security until age 70. I heard about this business that the Social Security Administration will increase your monthly benefit permanently if you wait past your full retirement age. Back in those days, that increase was 3% per year, not 8% like it is now. So suppose he would have decided to wait till age 70 to take Social Security. His benefit would have been then, if he took it at 70, 15% more compared to if he started at age 65. So he did that. My mother goes down to the Social Security office in 1985, knowing that my father's benefit is much more than hers. She goes to the Social Security office and says, I'm here to apply for half of my husband's. Social Security says to her, we're sorry. You can't do that. She said, why not? We're married. We've been married now for what, 40 plus years? Okay. Yeah, we realize that. So she said, what's the problem? The problem is he's not drawing. You can't get half of his, he's not drawing. You can get your own. And once he starts drawing, then you can apply for half of his. And you'll lose your benefit. And if half of his is more than yours, we'll add whatever you're getting to come up to half of his. So again, if the lower earning spouse wants to get half of the higher earning spouses, the higher earning spouse has to be drawing. There's a potential problem though. Suppose the higher earning spouse dies before they get to that age, they're going to start drawing it. Like my case, my father's age 70. Because he died at 69. 4 years after he delayed his sleep, he got 12% more. He's 69 yet, but he dies. How much will my mother get in that case? She's not going to get the increase. She's not going to get the increase because my father never received a check. She's only going to get half of his, whatever he's getting if he's drawing. If he dies before that point, that reach of when he wants to start drawing, those increases will not be built into the survivor benefit. He's not going to get, again, the survivor benefit is the amount that the deceased spouse was actually receiving at the time of death. If the deceased spouse had delayed the benefit, the surviving, in this case, the surviving spouse, my mother would not have benefit from that delay of benefits. All right, that's what spouses. Again, must be married for at least 1 year, will be the parent of a worker's child. The child must be younger than age 62 or any child if the child was disabled before age 62. Okay, let's read about divorced spouses. Let's read what it says here. Unmarried, on the last bullet, unmarried divorced spouse may be entitled to benefits starting at age 62. If the marriage lasts at least 10 years, the worker must be at age 62 or older, whether receiving benefits or not, and divorced for at least 2 years. Now, to understand this, I'm going to give you a real life example. This happened to one of my former clients. I had a client, their taxes for many, many years. And she, for all the years I knew her, she was always single. Before she retired, she was a social worker, had a good job. So about 12 years ago, she calls me up and around this time saying, she's turning 66 years old in August 2014, still working. And she said, Ed, I'd like to make an appointment to talk to you about drawing Social Security. I said, okay. So she comes to my office. This is a month before she wants to start drawing. She's turning 66 years old, her full retirement age in August. And she wants to know some of the advantages and disadvantages of drawing Social Security. I said, first of all, her first name is Judy. I said, Judy, let me ask you a question. Do you really need this money? Do you need the Social Security? Do you really need the Social Security benefit? Because you realize if you wait till age 70 to take it, you'll get 32% more. Those 8% delayed retirement credits for 4 years brings you up 32% more. She said, yeah, I do, and I don't. I said, what would you do with the money then? Oh, I'd probably invest it. Well, you're going to invest it. Again, you're talking about getting an investment return that's going to beat 8% a year. Social Security is saying to you, we guarantee you 8% more for every year you wait. I cannot find an investment out there that guarantees you 8%. Yeah, I realize that. And then I changed the gears a little bit here. I changed the equation a little bit. And Judy asked her question, were you ever married? She said, yeah. She sort of hesitated. Tell me about your former husband. My former husband was a telemarketing executive. 6-digit salary. All the years I knew him. Still working. How old is he? Oh, he's 68. You're 68. He's remarried though. I said, that's irrelevant. I said, Judy, are you aware of this spousal benefit? Yeah, but I'm not a spouse. I'm a former spouse. Just hear me out. Let's read what it says here. And a married divorced spouse, she's unmarried, may be entitled to benefits starting at age 62. If the marriage lasted at least 10 years, she's over 62, and her former spouse is over 60. She's 66, he's 68. How long have you been divorced from him? Oh, probably about at least, it's been 30 years since we've been married. 30. Oh, it's more than 10 years? Oh, yeah. I said, you could apply for half of his? She said, will he know about this? No, it doesn't affect his benefit. You can get half of his. But in the meantime, you're going to hold off taking your benefit till you're 70. Take his now. You're 66. Take half of his. And meanwhile, your benefit will continue to grow until you're 70. You start to, and then you take your benefit at 70. It's going to be 32% more, and then you stop taking his. Just one more question. Very interested. One more question. How long were you married to him? I just got to ask one more question. Oh, I was married to him for 9 years, 10 and a half months. 9 years, 10 months. What does this say here? How long did the marriage have to last? 10 years. I said, my God. You missed it by a month and a half. Why didn't you wait until 10 years, until your marriage? Why didn't you get out of the marriage sometime after 10 years, after you reach 10 years since you married her, your 10-year anniversary? She said to me, because my divorce lawyer knew nothing about Social Security benefits. I said, the divorce lawyer didn't know anything? Your divorce lawyer just cost you a big Social Security boost. I would sue that lawyer. This is so basic. And this is what I was talking about earlier, ladies and gentlemen, about the fact that you got to be aware of this. I'm not expecting you to be an expert. You know, you're listening to this presentation. That's great. You know, there are other organizations put on these information pieces about Social Security. I mean, like community colleges, they have these 1 or 2 evening presentations by experts in the field about Social Security, where you could take in information about Social Security. It's so important to keep track of this. I mean, here, my client Judy she lost that Social Security, former spouse benefit. She could have built up her Social Security into her own Social Security, but she didn't do that because she got wrong information where her lawyer didn't know what the lawyer was supposed to know. All right. These are beneficial spouses. When a worker files for benefits, the worker spouse may be eligible for a benefit based on the worker's earnings. Another requirement is that the spouse must be at least age 62 or have a qualifying child in his or her care. Be a qualifying child. A child who is age 16 who receives Social Security benefits. Once again, when it comes to putting children aside here, if a worker has, let's say that this is the person drawing Social Security, is 62, they're eligible to start drawing their benefit, and they have a spouse who is 62, at least 62, if they're drawing, and the spouse's own benefit is less than half of the worker's Social Security, spouse can do it. But again, the spouse has to be drawing. Keep in mind, though, that if you start your Social Security before your full retirement age, your benefit is going to be reduced. And if you are a spouse drawing on half of your spouse's Social Security and you're a spouse under 62, under 14, you're going to be subject to reduction, your own benefit, and then there's going to be a reduction for taking half of the spousal benefit before your full retirement age. So there's a double reduction there. Okay? And you'll do this online.
Before Ed continues, I want to pause again to show an example of some of the questions that we'll be happy to cover, and we do all the time in the part 2. Folks, we're seeing reports coming out this week that Social Security Trust Fund may have some issues by 2032, 78% benefits, things like that. So how and when you claim is going to be really, really important. So that's why we build in the follow-up meeting to this. Now, I do have something I want to share with you, but first I want to begin by saying thank you. Why? One of the things we know is that many of you found out about this training because of a friend or colleague telling you, and that is really important. Again, why? It allows us to provide these trainings at no cost and allows federal employees to access them whenever they need, whenever they want. By sharing the training with others, you're helping your friends get a better understanding of their benefits, and you're helping get the word out about the training. At SWS, we know that HR and retirement specialists under normal circumstances are stretched really thin. These are anything but normal. and they simply can't provide this type of comprehensive education for every employee. So I'm asking for your help. And I'm asking you to think right now of a person who should watch this training, and then please let them know about it. We've made that easy for you to share. Simply forward them to the link, this training, or send them to sdwserve.com, where they can access all of our on-demand trainings and other resources. We're asking each person to reach just one person, and that is super important right now. You are under siege. And Ed and I meet people, it seems like every month, that we're given 7 days to make a life-changing decision. And that breaks our hearts. We can't help people who don't know about us. So I'm asking you to make sure you share the information. So thank you for helping us spread the word about these valuable resources. And please remember, each one, reach one. Ed, take us home, sir.
Thanks very much, Dan. Great information. Ladies and gentlemen, we appreciate you spreading the word. I'm sure you have questions, your fellow employees have questions, fellow retirees questions. So if you could spread the word, we much appreciate it. We want to get to as many people as we can. That's why we're called Serving Those Who Serve. We're here to educate, to answer your questions. We do not sell, we educate. So again, thank you in advance for doing that. All right, let's continue with family benefits. Now let's move on to children. There are what's called Social Security children benefits. Who are children? It includes a natural child, an adopted child, a stepchild, if dependent on the person's receiving benefits. It's called the worker for 50% support, and a dependent grandchild. It happens where a grandparent adopts their grandchild because the grandparent's child or child-in-law cannot raise the child. So the grandparent is receiving Social Security benefits. So the child is going to get 50% of the grandparent's benefit. Okay? So I get it. Each eligible child gets up to 50% of the worker's PIA. The child must be unmarried, under the age of 18, or up to age 19 if still in high school, any age disabled before age 22. Now, I just want to share with you an example of how this works. This is a true story. A few years ago, I had a client who turned 62, and he actually had retired. He got married later in life when he was in his mid-40s, married a much younger woman, like she's in her late 20s, and they're like a 17, 20-year age difference. Anyhow, they had 2 children together. That when he was 62, they had a 15-year-old and a 13-year-old. So he asked me the question, if I take Social Security now at age 62, and I notice from my statement I'm supposed to get $1,400 a month, why $1,400 a month? Because, yes, why $1,400 a month? Because I noticed that if I wait to my full retirement age, I'm going to get $2,000 a month. I said, because you're under your full retirement age. You're starting Social Security at age 62. Now, that's the bad news. The good news is, since you have a 15-year-old and since you have a 13-year-old, if you're getting $1,400 a month because you're starting your Social Security at age 62, each child will get half of what you're getting, which is $700 a month. He said, well, what can they do with the money? He said, nothing. You could take the money and put it into a college savings fund if you wanted to. Okay? They're too young. They can't legally get the money, so you'll be their custodian. You'll use that money to pay for their college. All right. Then he said, boy, this is a tough decision. That 30% reduction in my benefit from $2,000 a month down to $1,400 a month is a big cut. What would happen if I were to wait to my full retirement age and get the $2,000 a month? I said, that's 5 years from now? He said, yeah. The 13-year-old, your 15-year-old will be 20 years old. We'll be able to get it because, again, when a child turns 18, any benefit they're receiving is going to stop. Unless the child is still in high school, and then when they reach age 19, it's going to stop. Your 15-year-old will be 20 years old in 5 years, absolutely no benefit. And your 13-year-old will be turning 18, okay, and then their benefit will stop then. So you got a decision to make. What do you want to do? So I think what he decided was he's going to wait to take his benefit. And he said to me, what about if I take it at 62, would my wife be able to get anything? And I said, well, how you'd say you have 2 children under the age of 16. Yeah. She would be able to get half of what you're getting too, because she's taking care of at least one child under the age of 16. But then I also said to him, I asked him, is she working? She's working. He said, yes, she is working. She is working. And I said, if she is working, she will not be an earning of substantial amount of money, not substantial, but over the minimum amount. Then she'll not be able to keep that Social Security it's called a parent benefit, taking care of a child these age 19. Social Security has a rule that if you're under your full retirement age, and drawing Social Security, and you're working, you're getting a salary, that salary is going to be, if you earn over the minimum amount that Social Security puts out every year, for every $2 you earn above that minimum, I should say maximum, the maximum they can earn without losing. For every $2 you earn above that maximum amount you can earn, Social Security will take back $1 of the benefit. How much is she earning? She's at $70,000 a year. She's way over. She'll lose the benefit, okay? Lose the benefit. Social Security has publications talking about these benefits for children. It's like a qualification for benefit spouses. I suggest that if you want more information about children benefits, download the publication entitled, like you see up here on the screen, Benefits for Children. Okay? Let's move on to survivor benefits. Survivor benefits. Okay? A monthly survivor benefit begins in the month of death. For surviving family members, that include spouses, it includes children under the age of 18. If someone has a dependent parent, mom and dad, who are totally dependent on their child for financial support. Mom and dad have no Social Security to earn, they got no income, they earn nothing. That child is supporting their parents. That child dies, the child is over Social Security, but then the dependent parent would be eligible for these survivor benefits. For survivors to receive survivor benefits, the person who is going to be provided this benefit has to be, all right, we talked about fully insured. What does fully insured mean? Fully insured means accumulated at least 40 credits of Social Security, okay? Now, there's another category that would make someone eligible to give survivor benefits. It's called currently insured. Let's think of a scenario where, God forbid, a young person suddenly died. Someone in their 20s, someone in their early 30s, whatever it is, tragic death, sudden tragic death. And that person had a family. If that person was currently insured, then eligible family members would be certain family members, spouses, children under the age of 18, dependent parents would be eligible for these survivor benefits. So what does currently insured mean? What does currently insured mean? It means that when the person died, they had earned 6 Social Security credits during the 13 calendar quarters ending with the calendar quarter of death. Let's do an example to help us understand. We are currently, right now, in the second quarter of calendar year 2026. It's June 2026. Let's suppose that during this this quarter, okay? A young person, somebody in their late 20s, passed away. They died in April 2026, all right? So let's go back 13. This is the 13th quarter, okay? Let's go back to the first quarter, the starting point, okay? So this is the second quarter of 2026. We have 4 quarters in 2025. Now we're up to 6. 4 quarters in 2025. We have 2 quarters in 2026. So that's 6. 4 quarters in 2024. So how much is that? That's 10. And now go back 3 quarters in 2023. So we're going back to April the 1st, 2023. So starting the period April 1st, 2023, and ending on June the 30th, 2026, the person passed away had earned during those 13 calendar quarters a minimum 6 credits Social Security. Then they are classified as being currently insured, and eligible family members would be able to get the survivor benefits. Okay? Now, here is something very important when it comes to survivor benefits, particularly for those individuals who, when they died, were not even close to being eligible to receive their own benefits. The Social Security Administration knows nothing about your family. They don't know anything about your family, nor should they. The Social Security Administration does not scan the obituary column of every newspaper in this country, finding out who died. They don't do that. The point I want to make about survivor benefits, when God forbid, a family member, no matter what their age, passes away, it is the responsibility of surviving family members to contact Social Security in order to receive their survivor benefits. If Social Security is not contacted, nothing's going to be paid out. Let me illustrate this with a true story. I had a neighbor 2 doors down, first name Gordon. Gordon was a lawyer. He worked in federal service. Actually, he was a lawyer in Congress. He started working in Congress in 2006. Married, wife Lisa, and 3 children, 3 young children. Gordon, he started working in 2006. In January 2012, he was diagnosed with stomach cancer. And his prognosis was not very good. To the point that a year later, after he was diagnosed, he was forced to retire under a FERS disability retirement. Now, Gordon was a very sophisticated guy when it came to finances. He bought life insurance policies to protect his family. It was before he got diagnosed. And I knew some of the insurance people he used to get these insurance policies. Well, unfortunately, these insurance people didn't know anything about Social Security. Didn't tell them anything about death benefits when it comes to Social Security. They probably didn't think it was necessary because Gordon's such a young guy. You know, when he was diagnosed with stomach cancer, he was like in his mid-30s. Well, about a year after he started receiving his Social Security, his FERS disability retirement, this is in May 2013, he died. About 2 weeks after he died, his wife Lisa calls me up and says, "Ed, I have a number of questions about Gordon's federal survivor benefits. Could I come over to your office today and just ask you some questions?" Certainly. So she came over. And before we got started, I said, "Karen, let me ask you a question before we talk about federal survivor benefits. Have you contacted the Social Security Administration about Gordon's death?" She said, "What are you talking about?" You know, when Gordon died, he was 38 years old. I'm 35. What are you talking about here? There's nothing to be it. Lisa, you're wrong. So there are survivor benefits that you can receive because you're taking care of at least one child who's under the age of 16, and each child is eligible for what's called a children's survivor benefit because each of your 3 children is under the age of 18. And she said, well, how much would they get? They would get 75%. 75%. Each would get a check for 75% of Gordon's PIA. Remember that? PIA? What's the PIA? It's the amount of one's monthly Social Security retirement benefit at their full retirement age. Gordon's full retirement age was 67. How much was that? $2,000. 75% of 2,000 is $1,500. Each child would get $1,500 a month. She said, how do I apply for it? You call. You can't do this online. You have to call. Here's the number to call, 1-800-772-1213. She said, when should I do it? I said, like now. Here, the phone's across the office. Go call 1-800-772 and apply for the benefit. Now, this was like 2 weeks after he died. This is like he died on May 9th. This is like May 23rd. I said, you need to do it now, Lisa, because each of the children are entitled to get those checks starting when? With the June check. The checks are being issued now. If you don't call now, and then you call next month, they're going to miss the June check. So she did. And each child got the check. I said, in addition to that, Karen's getting also 75% of Gordon's benefits. She's normally a widow has to wait until their 60th birthday to get all of their deceased spouse's Social Security. It's called a widow benefit. But not in this case, because she's taking care of at least one child under the age of 16. She gets the 75% also. Now, I don't know what would have happened had she not called me. Another story somewhat related. I was doing a Social Security benefits live seminar at a downtown Washington, D.C. museum. This goes back about 10 years ago. And everything I just told you, I mentioned to the attendees to that live seminar. So as I'm talking, there's a gentleman in the back of the room. He's shaking his head. He comes up to me after the seminar and says, I didn't want to stop you in the middle of your presentation, but let me tell you what happened to me. My wife died 7 years ago. And we have a son who's now 14. He was 7 at the time. And no one told me to apply for his children's survivor benefit. No one told me that. My question to you is, can I still apply for it? Is he still eligible for it? I said, yeah, until he's 18. The benefit's going to stop when he's 18. And the second question is, if I apply now, will they make it retroactive? I said, highly doubtful. Maybe it'll go back to maybe they will go back 6 months from now when you apply, but no more than that. I said, apply now. It's the afternoon. Call them up. Don't wait. Call them. You can't apply online. You have to call them. When it comes to survivor, you cannot apply online. Let me know what happens. About a week later, calls me up and says, well, I applied for his benefit and you were right. They only went back 6 months. I said, how much did he lose? Well, had he applied right away, he would have gotten $1,500 a month, 75% of his mother's calculated benefit. I said, let me get this straight. $1,500 a month. He lost 6.5 years. They went back 6 months. He's lost, I was 7 years ago. He lost six and a half years of benefits. I did the calculation. He lost $117,000 of children's survivor benefits. $117,000 of benefits he lost. Why? Because no one told him to apply for Social Security survivor benefits. That $117,000 could have been put into a college savings fund. A 529 plan. Once again, it's very important that people know about these benefits. Here, the information you see on the screen here comes off the Social Security website. I didn't make this up. This is what just comes right off the website. So keep that fact in mind. Okay. Who can receive survivor benefits? A widow, a widower, or a former spouse. Now, let's say there's a former spouse out there and the person receiving the benefits actually had divorced that former spouse years ago. When you are a former spouse and you want to draw on your former living spouse, you can if you don't remarry. You can if you don't remarry. If you remarry at any age, you're going to lose the benefit. But in the case of a former spouse who remarries after age 60, you will not lose the benefit. You can remarry. And I know that my wife's sister passed away about 6 years ago. And my brother-in-law, he was 68 years old at the time of her death. And I said to him, "Are you drawing your Social Security?" He says, "No, I'm waiting until 70. I said, "Well, in the meantime, you can draw on her half of her benefit or all of her benefit. All of her. She passed away. You can get all of hers. And then start taking yours at age 70. Yours will be 32% more. But in the meantime, he remarried. No problem. No problem because he was over 60. Surviving unmarried children on the age of 18 or up to 19 still in high school. A dependent parent. If you have a surviving divorced spouse, if caring for an eligible child under the age of 16, or disabled before age 22. And the benefits paid are based on the worker's PIA at the time of his or her death. His or her death. Okay. Widower must be married to worker for at least 9 months before death. A remarriage cancels Social Security benefits unless remarriage is after age 60. One is allowed to receive benefits at age 60 or age 50 if disabled if there are no qualifying children, any age if there are qualifying children. If a worker did not live to retirement age, widow can receive benefits calculated as if the worker was FRA at time of death. If worker dies at 40 years older, receives 100% of what the worker was receiving. In other words, whatever the worker decided to, when they started taking Social Security at their full retirement age, and then passed away, the surviving spouse would get 100% of what they're receiving. If the worker decided to take Social Security at age 70, getting that enhanced benefit, and then was actually receiving it, then the surviving spouse would get that benefit. All right. Here is that earnings test I was mentioning. Okay, so affects Social Security recipients who are younger than their full retirement age, FRA and who work. Let's look at this year, 2020, because every year Social Security sets a limit for those individuals who are younger than their full retirement age and who work. Again, the scenario is somebody is still working, and they're younger than their full retirement age, and they want to draw Social Security. There's a limit as far as how much they can earn before Social Security is going to reduce their benefit. So this year, 2026, anybody who was born in 1960, 1961, 1962, 1963, or 1964, that means that they are between 62 and 67. They're younger than their full retirement age. They're working. So how much can they earn before losing benefits? They can earn up to $24,480 or $2,040 monthly without losing benefits. If they're earning more than $24,480 this year, then for every $2 they earn above $24,480, Social Security will take back $1 of their benefit. There is a separate earnings test for those individuals who reach their full retirement age during the year. And what is that earnings test all about? Anybody born between March 2nd, 1959 and January 1st, 1960. Your full retirement age is 66 years and 10 months. You can earn this year, starting January 1st, 2026, up to $65,106. You could earn between January 1st and the month you reach full retirement age. Say you're going to reach full retirement age in September 2026. Between January 1st and August 31st, 2026, you can earn up to $65,106. For every $3 you earn above $65,106, Social Security will take back $1 in your benefit. Once you reach the month you reach full retirement age, at that point, you're in your full retirement age, you reach your full retirement age that month, you can earn as much as you want. As much as you want. There's no more earnings test. And keep all your benefits. Keep all your benefits. Now, we're talking about only earned income here. Earned income is salary and wages and self-employment, net self-employment income. That's what earned income is. I call it the sweat income. You got to sweat to get that income. You got to be doing something, as opposed to, let's say, passive income. Any investment income you receive, interest, dividends, capital gains, pension income, IRAs, even Social Security benefits doesn't count, okay? It's not included in the earnings test. It's just earned income. Social Security is taxable, in spite of what you may have heard last year with the one big beautiful bill act said that's, one of the provisions is that Social Security will no longer be taxed. That's not true. Social Security benefits have been taxed for the past 43 years. Part of the 1983 overhaul of Social Security said that Social Security starting then will be taxable, and it continues to be taxable. How much is taxable? For most people, 85% of whatever they're getting will be included of their benefits will be included in their income and taxed at whatever marginal tax bracket they are. Let's spend a few moments here talking about apply for Social Security benefits. Apply for Social Security benefits. If you are a non-disabled person, employee or retiree, it's a good idea to contact Social Security about 3 months, 2 to 3 months before the month you want to get your first check. And please apply online. This gets back to one of the first things I said earlier. That if you don't have a Social Security online account, please get one. Okay? The most efficient way to apply for Social Security is online. Okay? There is the link there to apply online. If you go to that link, here it is. It'll take you right into applying for benefits on the website there. Okay? And it gives you the terms of service, and then you got to check this box. I understand and agree to the above statements. Okay? And then you do the same thing when you apply for Medicare. But in this case, you're applying for Social Security. So let me give you my experience when I applied for Social Security online about 5 years ago. This is November 2020. I'm turning 70 years old in January 2021. I'm turning 70 years old in January 2021. So I got online in the middle of November 2020 and applied for my Social Security benefits. And the questions included what's your name, date of birth, Social Security number. They wanted to know if I was covered by a pension plan in which I didn't pay into Social Security. I said yes, called CSRS. Back in those days, I was, before the Social Security Fairness Act, if you were a CSRS annuitant, your Social Security benefits would be reduced because of the WAP, and they were. And then a question comes up. Please tell us please tell us for which month you want to receive your first Social Security check. The tone here, again, please listen to what I'm saying. For which month? I didn't say in which month. I said for which month you want to receive your Social Security, your first Social Security check. And I said, I want my first Social Security check for the month of January 2021. Please understand that Social Security benefits are paid out each month to recipients, assuming they were alive for all of the previous month. I wanted my first Social Security check for the month of January 2021 to be paid out in February 2021. Why is that? Remember I told you I waited to age 70 to receive my first Social Security check in order to get the maximum benefit possible. 8% per year. I waited for 4 years, a 32% bump in my benefits. I wanted every piece of that 32%. It's 8% per year. It's 2/3 of 1% per month. If I would have said, I want my first Social Security check in January 2021, then that would have assumed that I was alive for all of December 2020. But I wouldn't have gotten that extra 2/3 of 1% benefit. I'm a cheap guy. I wanted every penny of it. So that's what I said. Please make my check for the month of January 2021 to be paid out in February 2021. Then 2 weeks later, a Social Security counselor calls me up. They want to verify all the information on my application. And the counselor said this to me: are you interested in a retroactive lump sum payment? I said, what are you talking about? Yeah, we Social Security will give you an offer. Since you waited past your full retirement age, we have this opportunity in which we will make your application retroactive for back to 6 months. You're going to start earlier, and we'll give you 6 months of benefits for this retroactive application. I said, wait a minute, how is this going to work? Oh, we'll just, we'll make your application retroactive back to July 1st, 2020, and we'll pay you in a lump sum 6 months of benefits for making that 6-month retroactivation. I said, I still don't understand what's going on here. Give me some numbers here. The counselor said, okay, your benefit is supposed to be, let's say, $2,000 a month. And that's based on a 32% bump in your increase. If you take our offer, we'll give you a check for $12,000, as if you applied 1 year earlier. I said, wait a minute. You're going to give me an increase of benefits. My benefit will be increased not by 32%, but 24%. Is that right? He says, yeah. As if you waited only 3 years. It's called a retroactive application. Going to permanently reduce the benefit I was entitled to, just for the purpose, in order to get this lump sum payment. I said, hold it right there. I got to do a quick calculation. And my calculation said this: how long would I have to live to make this worthwhile? Getting that $12,000 in a lump sum payment, well, my benefit is being reduced down to like $1,500 a month, just because I lost the 8% increase, approximately that much. The answer is, if I died within 3 years of this benefit, then it would be worthwhile. I said, forget it. I don't plan to die within 3 years. Yeah, things do happen suddenly. I was right. So beware that if you wait past your full retirement age, Social Security will say to you, well, we can make your application retroactive and we'll give you this lump sum payment. It's not a good deal. Because not only will your benefit be reduced, but if you have, let's say, a spouse who's depending on getting your benefit when you pass away, you previously went, your spouse's benefit is going to be reduced. It's called the retroactive benefit. It's not worth it. Okay. Again, you can apply online. It's highly encouraged. Information about you, you're going to need to your date and place of birth and Social Security number, the name, Social Security number, and date of birth of your current spouse and any former spouse. You should also know the dates and place of marriage and dates of divorce or death, the names of any unmarried children under the age of 18, your bank and other information. Every Social Security, you have to have direct deposit of your Social Security check. No more checks are being issued. Okay. Your citizenship status. If you're applying for retirement benefits, the month you want your benefits to start, and that's for the month, not in the month, but for the month. And if you're within 3 months of age 65, whether you want to enroll in Medicare Part A and Part B. In fact, if you start taking your Social Security before age 65, when you turn 65, you will automatically be enrolled in Medicare. But if you apply at 65 or older, you have to actually formally apply for Social Security. You have to formally apply for Medicare, I should say. When do monthly Social Security benefits actually stop? As I said a few moments ago, in order to get a Social Security check in a given month, that's for the last month, you had to be alive for all of that month. If you die within that month, and so those security checks will be paid out. This is some examples here to better understand. We have Joe Johns. He was entitled to monthly Social Security benefits. He died on September 30th, 2025. The benefit for a month is paid the following month. No benefit will therefore be paid for September. If the Social Security Administration had processed the September payment, put in the money into Joe Johns' account, the family has to return the check. Example 2, Margaret Mason. She was receiving Social Security benefits and died on October 1st, 2025. Now, she lived throughout September. Since she lived throughout September, when her October 2025 payment is deposited into her bank account in October, the family can keep it. They don't have to return it. Talking about direct deposit, how are Social Security checks deposited, what day of the month? Social Security checks are directly deposited into bank accounts on the second Wednesday of every month, the third Wednesday of every month, and the fourth Wednesday of every month. If your date of birth, no matter what month you're born in, if your date of birth is between the 1st of the month and the 10th of the month, you get direct deposit for your Social Security check on the second Wednesday of every month. If you're born between the 11th of a month and the 20th of any month, you get direct deposit of your Social Security check on the third Wednesday of every month. And if you were born in any month between the 21st of the month and the end of that month, you get direct deposit of your Social Security check on the fourth Wednesday of the month, on the fourth Wednesday of that month. So I turned out I was born on the 17th of a month, so I get direct deposit of my Social Security check on the third Wednesday of every month. And my wife was born on the 23rd of the month. She gets direct deposit of her check on the fourth Wednesday of every month. Okay, so that concludes my presentation. Dan, let's sort of summary here about everything, and then we'll wrap this up.
Yes, sir. You know, folks, working with Ed as long as I have, I know what it feels like when you start drinking from that fire hose of information. I'm sure you've paused it and wound it back and listened a couple of times right now. But one of the biggest things we do is help you sort the information from that fire hose in part 2. So I just want to take a moment to reiterate the differences between parts 1 and parts 2. So for example, regarding TSP, part 1, what are the rules? How much can you put in? How does the match work? Part 2, how might you want to be maximizing your TSP? What's a good strategy for you? regarding your pension. Part 1, how does it work? What's the eligibility criteria? What's the formula? Part 2, what is yours going to look like? And what does it look like if you work a little bit longer or even a little bit shorter? Regarding Social Security, what are the rules around when you can draw? That's part 1. Part 2, what's the best strategy for you and your family as far as when to draw? So on our final screen here, you'll see the QR code to schedule your part 2 session. And again, you can also email us at part2@swserve.com. We created this on-demand format because you asked for flexible, accessible training that fits your schedule. And that's what we do. Serving Those Who Serve, we listen to what federal employees need, and we do our level best to respond. So whether you're just starting to think about retirement or you're getting close to making that decision, we are here to help you understand your benefits and make informed choices. So I'm going to say thank you, Ed, for another great training session. And thank you, folks, for taking the time to invest in your education. Check out our website, swserve.com, for more on-demand trainings, Ed's Fed Zone columns, our Fed Life podcasts, and all the other resources. And remember, this training is available to watch again and again anytime you need a refresher. And if you need any specific guidance or help on your individual situation, we're here for a part 2 session. Thank you for being part of the federal employee community you serve. Ed, as always, I'll give you the last word, sir.
Thank you, Dan. Wish everyone the very best. Thanks for listening to this broadcast. We look forward to serving you in the future. All the things we have to offer, live webinars, part 2, podcasts, blogs, Fed Zone columns, everything is there. We have a mission. We're trying to get everyone's questions answered, help them through these very challenging times. And we're not here to sell. We're here to help you. That's why we're called Serving Those Who Serve. If in the meantime you have any questions, you want to get a hold of us, we have a dedicated mailbox. It's right here, askstws@servingthose.com. Send your question in. Someone will answer it. We're Serving Those Who Serve. If they can't answer it, again, they'll turn over to me. I'll be happy to answer your questions. Wish everyone the very best. Be well, stay safe, all the best. And finally, thank you, Dan, for hosting today. I couldn't do it without you, so thank you so much.
Always a pleasure, my friend. Folks, we will see you the next time.